I'm Dave Mooney. I'm the CEO of Alliant Credit Union based in Chicago. We have a national membership and would describe us as largely a digital-first institution. We have 2 locations, no cash, so largely access through digital channels as well as phone.
Thank you.
Hi, I'm Michael Roberts. I'm the Chief Marketing and Digital Strategy Officer for Bank of America Merchant Services. We are one of the largest payment processing companies in the globe that serve businesses from small business all the way up to some of the largest brands that you would shop at every day online and in person.
Hi, I'm Nathalie Dore. I'm the Chief Digital and Acceleration Officer of BNP Paribas Cardif, which is the insurance business line of BNP Paribas Bank. We operate mostly in Asia, Europe, and Latin America.
Good afternoon, Matt Ribbens. I'm part of our enterprise digital strategy team at BB&T. We're largely tasked with sort of the broad digital transformation of the bank, but more recently I've gotten involved a lot with Fintech partnerships, and more recently even we've made some investments, which we'll talk a little bit about later.
Hello, I'm not Luis Valdich, the good-looking Latino. My name's Travis Skelly. I work with Luis at Citi Ventures, so we're the venture investing arm of Citibank, making post-seed investments all the way through pre-IPO, looking for companies that fit a number of different verticals or investment trends that are helpful to the bank and our clients.
Thank you. So again, great panel. Hopefully we'll have some great questions at the end. But first question, the track is emerging technology. So what I'd like to ask is what everybody's idea of emerging technology is. What does emerging technology mean within your organization, and what are the highest priorities in terms of emerging tech that is part of your stack or your purview?
Okay, is there a wave or ladies first?
Ladies
you're looking at me, okay, so I jump on it. To me, emerging tech, it's mostly deep tech, so technologies that can impact like autonomous system, smart home, medical devices. So for insurance businesses, it means a lot because thanks to this deep tech, we can improve the current business, but also it means that it can decrease some risks, which is a good thing for the end customers. For us, it means more services, more prevention, and it can also create new risk, which is an opportunity for us. So it really has an impact on the business itself.
That's great. Any opinion on the new Apple technology with the medical applications there?
Yeah, so to me, connected health is a big topic. I think to work, you have to be open to the most devices you can share, because I think the end customer, they are not 100% Apple or 100% Android, etc. So I think interconnectivity is very important to that. And precision medicine for insurance, I think you need to find the right balance towards individualization, but at the same time, you need to keep some mutualization in terms of ethics. So I can talk a long time, but I think it's a question of balance, and as a company, we have to put the balance at the right level.
Thank you, great feedback.
And in terms of emerging technologies for us, it's really finding the technologies that meet the emerging needs of our customers. And what we're seeing in the marketplace is our customers have kind of 3 major priorities. Priority number 1 is fraud and security, which is followed closely by cost of acceptance, and those two have a big interchange. But something that's new for us as a payments company, and I think this is where payments is finding its way in terms of these partnerships, is really how we can intersect with our customer experience. So it's really, security, cost of acceptance, and customer experience are the major things that our customers care about, and we are having to find new ways to attack the age-old problems of security, fraud, and cost of acceptance, and now find our way into a complicated discussion that's about customer experience that's really not endemic to how financial services firms and banks operate.
That's great. Matt?
Sure. I think our digital transformation efforts are really focused around improving client experience. So I think when I think about emerging technologies, it's really about those things that our clients are expecting from us, which can be changing, as we've all heard. Also, I think the artificial intelligence, machine learning space, which everybody's been talking about, is clearly still sort of emerging, in our opinion. And the applications for it, I think, are broad and wide, but finding the right places to apply it, I think bringing it into the organization is part of the role our team plays.
That's great.
Yeah, I would just kind of echo what Michael and Matt said, is that for us, it's less about necessarily the newest technologies as it is about the application of technology to solving issues both around member experience, around marketing communications, around back office or operating efficiency. So how do we apply technology, whether it's more advanced like AI and intelligent machines, or whether it's more conventional technology, at least more accepted technology like mobile, to create a better experience or to differentiate our offerings.
That's great.
Yeah, and I'd agree with all that. Being the customer or client-centric is kind of the driving force behind all of this, especially as I don't think of us as being necessarily the leader on the tech front, but where we do try to, and I'll push the ball a little bit further, instead of emerging, I'll say frontier. So some technologies that Citi Ventures gets to touch and play with are not technologies that necessarily the bank would use today. We don't even know if the technologies are real, like quantum computing yet, right? Like still unproven technology, VR, AR, how is financial services going to use that? Interesting use case, USAA just invested in a company that helps you use VR to buy cars, right? Well, what impact would that have on financial services later on? Things like that are not necessarily impactful today to Citi and our customers, but it will come, and someone within the bank should have a perspective. And so from an R&D perspective, we, in kind of very much of a fun way, get to touch and feel some of those technologies.
Excellent. So that's a really good lead into my next topic or question, which is what types of partnerships are we investing in, and how are these being prioritized? Also, what does investment mean? So Matt, I know you mentioned that I believe BB&T has a fund now for making investments, and Nathalie, I believe that you've made some investments at Paribas.
Yeah.
So, and Travis, we know what you do. So I would, love to get everybody's, opinions on that.
Sure. If I could jump in there, I guess we have announced at the beginning of the year an investment commitment of up to $50 million in Fintech. So we're very excited about the potential to deploy that in sort of means of helping our client experience. As I mentioned before, the first investment, oddly enough, does not fit that necessarily, but it does go back to machine learning and AI. So one of the things we partnered with a company called Enigma, based here in New York, that does data as a service solution. They take a lot of data from public records and a lot of the data that's available out in the market, but is not stitched together in a meaningful way, and they're doing that today. It can also help us with some of the data challenges we have, as was mentioned in some of the previous sessions. Banks have a lot of legacy systems, a lot of siloed data. They're able to bring some of that together on our behalf to help make us more efficient and more productive in terms of what we're doing to detect fraud, to be able to address any money laundering concerns. But we think it has broader applications too. That's what's exciting about the partnerships that we have currently and that we expect to have in the future. So the $50 million is really a way for us to accelerate our digital transformation. It's not the only way we're going to transform, but it's a key part of it.
That's great. Nathalie?
Yeah, we have 3 kinds of partnerships on the emerging technologies. The first one is partnership with startups. So we have created a fund 2 years ago managed by Citi Innovation. And so far we did 9 investments in blockchain, AI, IoT, all this technology we are talking about. When we do an investment, we always do a project with the startup. So it's something, we don't do just the investment and waiting for a financial return. We want to do a learning curve about the technology, to test it, really to learn on it, and to accelerate our time to market. That's why we do it with the startups. So that's very important to do the project. And for the startup, it's also an acceleration for them because they can have access. We have 100 million customers, so they can have access to a market, they can test it. We did it as an example with NG app for connected car. They could test it, the UK market, thanks to our investment. So this is something, to me, it's a win-win situation. We do have partnerships with academics, also on emerging techs, but it's more for R&D, so we are waiting for a more long-term returns. For some use case, maybe that are not for today, not mature enough, but we want to investigate on it, still to do the learning curve. And we also have a partnership with General Assembly. We signed it last May, also to upskill and reskill people inside the company in regards to these emerging techs, because we think our actuaries need to be upskilled on data science, as an example. We think our IT people need to be reskilled on DevOps, on programming. So this is also something we did through partnership. I don't know if we can say General Assembly is still a startup. They just were by Adecco, but it's a nice success story for them.
Anybody else?
Yeah, I think the sorts of partnerships that we're thinking about are really kind of in two directions. In our business, we are being disintermediated by software companies that are embedding payments into their business software. And so for us, a big part of the partnership strategy is to kind of figure out how to get into those channels, how to actually work with the software companies to become a channel for us and embed our capabilities into those software companies. So that's getting business to us through channels that we were previously being disintermediated by, but now need to participate in. And then the other side of the partnerships, I'll call from us. So things that we're embedding into our offering to bring to the millions of clients that we serve and millions of merchants that we serve. And in that space, it's a similar idea because we're embedding our capabilities into software that's more integrated into our customers' business. But we have to look at it really, really carefully. In a lot of cases, us being embedded in the software and us providing that as a solution from us puts us in a position where we don't necessarily have the right to have that conversation with the client. If we're talking about store operations for a retailer, that's not something they'd expect from a bank. And so in many cases, the partnerships that we strike have to leverage the brand of the fintech or the startup in order to have credibility with the marketplace. So we'll lend our brand and distribution to them. They lend their brand and credibility in kind of an emerging space to us, and it becomes a win-win in that way.
I think that's a really good point. I mean, especially with a Bank of America or a Wells Fargo, or you are somewhat at risk of being disintermediated in different ways. And if you can work on those partnerships and work ways to get the brand out there and be cooperative. Dave?
A lot of our early activity has been in the area of lending. One partnership that's sort of interesting is one that we're doing with a startup that uses psychology, behavioral science to evaluate and qualify borrowers to help them better manage spending and debt, ultimately put them on a path to financial well-being, and importantly, make them better credit customers, improve payment performance. So we have partnered with them and kind of several objectives. The primary objective actually for us turned out to be learning, and specifically to the topic of this session was to learn about how to work with fintechs, as well as kind of pick up some of their intellectual capital, but primarily to understand how you work with fintechs, because as an American Banker article was titled, financial institutions are from Mars and fintechs are from Venus, and the situations and motivations are very, very different. Not a value judgment, just I think a fact, and reconciling those differences is important. So we learned a lot in that. We had modest expectations also for financial gain, but we did see it as having also a direct financial benefit to us, opening up new markets, access to new borrowers.
That's been important to us as well, is figuring out partnerships and structuring things where we can actually learn how to work with these companies and learn how to work differently. And in one case, we actually hired the fintech company as a consultant. Before we actually even entered into an agreement with the partnership, we had them come in almost on a consulting engagement. Easy to paper, easy to get moving, make it lucrative enough that they can turn their attention away from what they were doing, but not a gigantic investment for us, and allowed us to kind of understand their culture, their methodology of how they did things, build kind of working prototypes, that we could use to test the concept and really figure out if there was a fit ahead of actually, putting all the sweat equity into making the investment.
Travis, you weigh in at all?
Yeah, I mean, obviously from Citi Ventures' perspective, we invest in early stage companies with the goal of, well, not early stage, I should say startups, with the goal of commercializing them with Citi, with our clients, and having the result of tangible and intangible results of cost savings and revenue generation, or some of the learning efforts that you guys described that ultimately get kind of wrapped into what I would call stories that get facilitated throughout the organization. I would say, just picking up on kind of one of the threads that you were discussing about learning how to work with startups. I think it's been a two-way street. It was originally the fintech saying we're taking down the banks don't matter, and then I'm not telling anyone anything new, but then the banks coming back and saying, well, we're not going to work with you, and then now we're at a place where we want to work together. But I think it's also been a moment where the fintechs are realizing there's reasons why it's hard for us to work with startups. You don't have your security procedures up to snuff. You don't have regulations to abide by. We do. But there's benefits we get by having to abide by regulations and restrictions that we have. So I think we're coming to a place where, there was learnings required to work with fintechs, but there was also learnings required by fintechs to work with banks, and a bit of ignorance at the beginning on both sides of some of the gaps of working together.
That's great, thank you. It's so you're leading into we're coming up on time, I guess, but everybody is touching on one topic that I have is the challenges of working with the fintechs and the cultural differences and the differences in outlook that everybody has. But what I'd like to touch on first too, and everybody mentioned it to some degree, but what's driving the investments for the organization? And is that, it sounds like it's a number of things, but for instance, response to competition, response to customer needs and customer demands, or are you also looking for differentiation? So how do I differentiate myself from my competitors? So.
And again, I think that's an essential question, because I think if you are not very thoughtful and very clear about what your objectives are going in, and they can be different in different situations and with different potential partnerships, but otherwise I think you run the risk of what one writer referred to as creating petting zoos, where you just have lots of interesting experiments there to look at, but nothing really coming out of it. So again, one of the things we have learned is that it's very important to be very thoughtful, very clear on what you're trying to accomplish, whether that is direct financial gain, growth, opening new markets, reducing expenses through efficiency gains, improving your marketing effectiveness, whether it is acquiring strategic capability like competency around use of AI and machine learning, or customer-centered design, or whether it's simply learning. And if it's learning, be very clear at the outset about what it is you hope to learn. No guarantees, obviously, particularly when we're talking about innovation projects. But I think that's what's critical, is to be clear and think up front how you will evaluate that. As somebody said to me earlier today in a conversation, you need to think of the end before you start.
That's great. Excellent point.
Yeah, what we did on our side, So it's very easy to do a proof of concept. It's more difficult to do industrialized projects. So what we did with the startup, we imagined something in between, which are innovation pilots. We connected to the information system with real clients using the product, but a small database of clients. And then it was easy to start the project with the startup, no RFP, the procurement process is very easy, etc. And at the same time, we can work on the industrialization phase. So for us, during this innovation pilot, it's really done with the lean startup culture. So we put assumptions, and then we put KPI with these assumptions to say, okay, if these KPIs are reached at the end of the pilot, we will do the industrialization. And we share these KPIs with the startups like that. They know that at the end of the pilot, if this is good, we will do the industrialization phase. And like that, it's clear, and it's really appreciated.
No, that's really good. That's a great method of doing it.
Yeah, I think for us, we'd love for fintech partnerships to materialize to the point that they really do impact our client experience and really do help make things more efficient at the bank. But I think too, all the other points that were made too, learning is a big part of this, and it goes both ways. So I think we do a number of proof of concepts as well to help kind of, similar to what startups talk about of failing fast and kind of moving forward. We're trying to do something similar. So there's, again, a great deal of work that goes into any large project that happens at an institution of our sizes. And you don't want to take that risk on something that you don't know you can make it to the finish line with. So proof of concepts, proof of value can really help drive some learning. So learning is another key part of what we're doing this for.
Yeah, I'll make where I've seen the different levels of people pushing the envelopes based on trying to be more innovative. A bit of a barbell approach, and this is a bit a blanket statement, so don't quote me on this because you can poke holes on it. But on the businesses there, Citi's really strong, and we want to maintain that. I've seen great appetite by some of the leaders to experiment with innovation and startups and partner with startups to maintain that position. And as a leader, that it'll be okay if some of those things fail. On the other hand, I've seen where we're not as strong, a similar mindset, because why not, and go for it, and let's test, and we have to make up some market share. Where the middle part of the barbell, it's more keeping up with customers, clients, and competition. And so that is more a little bit BAU of innovation and testing and learning. But on the ends are the things where I get excited, because those are the guys that are really having to, or in both ways, gaining market shares or maintaining it. So that's where I think you'll see more experimentation now and in the future.
Michael, did you want to weigh in? Okay.
No.
All right. All right, thank you.